Eddie Ghabour joining us this morning. Okay, Eddie, you say this is a bull market, so buy any dips. This seems like a change of tone and strategy to me. Suddenly, it's a bull market and you're going to buy everything, any dip. Make your case.
Stuart, we are a data-driven, math-driven firm. As you know, March the 3rd, we sold a lot of our equity holdings. And then we saw the market drop by 12%, and our signals got us back to start dollar cost averaging back on April the 21st. And the reason for that, and you're getting confirming information, in our opinion, that our data is pointing that the economy is going to be reaccelerating, and the market and the math is supporting that. You're getting higher lows and higher highs on the stock indexes. You're getting lower lows and lower highs on the VIX. On down days like yesterday, it's on very light volume. And for the last 3 weeks, the bond market's been trending upwards. And we think it's trending upwards because the bond market is smart and recognizes that we're going to get accelerated growth. So when you see those data points and they continue to get stronger, we started buying on the 21st, and then you aggressively buy more and more and more as each week goes by and you get confirming data. And we will continue to stay bullish until the data flips, and then we will take profits, risk manage, and that's the only way you're going to be able to handle this market, because the market structure has changed, and we'll have plenty of times where we're going to have to continue to pivot. But the data right now is a screaming buy, in our opinion, if you have the right risk tolerance.
I'm told that yesterday you bought IWM, okay, iShares Russell 2000 ETF. Okay, you bought it yesterday. Why in particular a small cap company, ETF?
There's a couple of reasons why. The first reason really is small caps have been one of the most hated areas. And if we get the acceleration we expect on the economy, you're going to see small business sentiment rise, and you're going to see revenues increase on small cap companies. And because their comps for quarter over quarter are so weak, they don't have a big bogey to hit in order to beat on the upside. So you're going to see accelerating revenues, an easy bogey to beat. And if we get that, you should see that risk appetite increase over the next couple of months. And we would expect the IWM to outperform the S&P if we're right. If we're wrong, we'll get out of it. But the other thing is we have the luxury of adding a higher risk play because of the timing of getting in back in April. So we will increase small caps. We put our minimum position on this week. And look, yesterday, small caps were in the green while the market was red. So you're getting some relative strength.
Well, let me tell you that earlier this morning, Kevin Hassett was on this program, and he was saying, look, you're going to get better than 3% growth in the second half of this year, maybe even 4%. That suits your scenario entirely. Eddie Ghabour, thanks for joining us. See you again real soon.